Hello everybody, welcome back to RNC. Today I will be giving you guys a little preview about an article that made, we've written down. We'll be reading a little bit to you, and if you want to read the rest you can click in our website, which will be in the description down below. So, the stock market has been crazy this year. Fears of recession and inflation. As the stock market falls, there's another story to this. Investors on Wall Street bets and Twitter see this news as a perfect time to sell. This news has been warning us of a recession since the beginning of 2022. As recession fears got worse, the stock market got hit hard. As the stock market fell and people sold their shares in fear, those in the meme investing culture made a killing. As of right now, people have reported making $40,000 to $100,000. This news is telling them all they need to know. Professional investors and analysts are warning them about an upcoming recession. The U.S. Federal Reserve brings up interest rates to try to save the economy from the unstoppable. Companies report poor earnings reports and stock prices tumble. During all this time, meme culture investors have been making huge loads of money by short selling. Is there more to it? As more people short the market, this causes things to get lower. But like always, during down moves, there's rallies. Meme stock investors have said these rallies are caused by stupid retail investors who are buying the dip. The media warns us not to buy the dip. Some institutions like Larry Fink, founder and CEO of BlackRock, have said they themselves aren't even buying the dip. Republicans are blaming the inflation and recession on U.S. President Joe Biden, along with the fact that gas prices reached new highs this year. R/Wall Street Bets and those on Twitter have been telling people to short the market. It's easy money, is it not? What caused this? The 2020 COVID-19 situation caused a crash in the global economy. As a result, central banks of all countries began printing large amounts of money to relieve their economy. All this new money was given to the people, and the people with the large amounts of money began spending it lavishly, especially stocks. As a result, the American economy and the stock market reached new highs. Everyone felt the power of the American dream, especially those in the stock market. In summary, all the money printing caused an economic bubble, and every bubble has a bust. Those in the media realize this, hence they're calling for a recession, and this causes a lot of investors to sell their shares and short the market. But wait, when a recession happens, nobody knows it's coming. Never in history have the people rallied up to make a profit in a crash. How did the people find out about the current recession? The media. News channels have been reporting a recession since the beginning. What institutions are doing? As I've said in the beginning, Larry Fink, founder and CEO of BlackRock, have said they're not buying the dip. JP Morgan and Goldman Sachs have said that the United States Federal Reserve Bank will not be able to save the American economy or the stock market from the upcoming recession. But what about their 13F filings? The purpose of Form 13F is to provide a reporting and disclosure system to collect specific information and to disseminate such information to the public about the holdings of institutional investment managers who exercise investment discretion over certain amounts of equity securities described in Section 13. We will be looking at three institutions in particular: the United States stock market. In the United States stock market, there are three asset management institutions, all worth $21 trillion. These three institutions control global financial markets and have ties with governments in the United States and Europe. These institutions also control the same media that's warning us of a recession. State Street, $4.7 trillion under management. Vanguard, $7 trillion assets under management. And BlackRock, $10 trillion assets under management. While these three institutions together have $21 trillion, which is more than 97% of S&P 500 companies, everyone else in the markets combined have $2 trillion. State Street, biggest holding, portfolio percentage: Apple, 14.3%, Microsoft, 12.4%, Alphabet, 8.08%, Amazon, 7.2%, Tesla, 4.7%, Nvidia, 3.5%. As of May 2022, State Street Corporation stocks holdings is 613 million shares of Apple Inc., currently worth over $107 billion, making up 5.3% of portfolio value. Relative to the number of outstanding shares of Apple Inc., State Street Corporation owns more than approximately 0.1% of the company. In addition, the fund holds 300 million shares of Microsoft worth $92 billion, whose value fell 23% in the past 6 months. The third largest holding is Amazon.com, worth $54.1 billion, and the next is Tesla Inc., worth $34.9 billion, which is 32 million shares owned, with 32 million shares owned. That is it for this video. If you would like to continue reading the article, then you can go on our website, link in the description down below. Thank you for watching.